You don't want to do this entrepreneurialism alone. It's only delusional when it's not working. But when it start working, was it really delusional? Like, before you want to jump into anything, your brain, literally your mental, has to be on point. You still can get out there and get started, right? It's never going to be the perfect time to start. To make money, you do have to spend money, but that's where the OPM comes into place. The number one game I can give, man, in entrepreneurship, you have to become a whole different person.
Hi, and welcome to the Key Concepts podcast. As I was preparing for this podcast, I felt like I came across the infinity money glitch. So I'm super excited to welcome my special guest, Neal, the CEO and founder of J&M Enterprises. Erron, thank you so much for being with us.
Yes, sir. Today. Love. All the way love. Yes, sir. How you doing, Corey?
Good, man. Thank you.
Yes,
thank you
sir.
for coming on. It's
man,
been
thank you,
a pleasure.
It's a pleasure for me as well.
Awesome. Erron, hey, for someone who doesn't know about J&M Enterprises,
yes, sir.
How would you explain what it is and what do you do?
First and foremost, I like to break down what J&M stands for, right? J&M stands for Johnson and Minnie. Those are my great grandparents that raised me, right? Help my mom, help my mother, things of that nature. So my great grandparents, they are in heaven now. So I started this company in the name of them, you know what I mean? Just to keep their legacy alive and things of that nature. So that is, again, Johnson and Minnie Enterprises. Basically, you know, what we do, we help small entrepreneurs and small business owners attain business capital without showing any type of financial documentation. Now, that's all about leveraging your personal credit. But let's say a person doesn't have any personal credit to leverage, right? That's when we go into, if you've been making some money through the business bank account, you know, and you've been in business for, let's say 6 months to 12 months, that's called revenue-based funding. So we'll still fund you guys based off how much, you know, revenue that's coming to the business bank account. So we're the money guys, basically. You know, we'll get your business off the ground, no documents, no tax returns, no bank statements, no payroll. As long as you can leverage that personal credit, we can go ahead and get you in the game.
No, that's awesome. So it sounds like for really new businesses where they need money or they're running out of money and they don't know how to sustain their payroll or need to get an assistant. Correct. And they don't have maybe the credit score for one reason or another, because obviously it doesn't tell the whole story.
Correct.
This is a good opportunity for them to connect with you and then figure out these new creative funding strategies.
Yes, sir.
To sustain their business until they could kind of turn over a new leaf.
Yes, sir.
And on your socials, you talk a lot about other people's money. So what is other people's money?
Other people's money, man, is literally other people's money. Literally, it's like it's self-explanatory. So it's like, you know, when you put your money into a financial institution, credit union, bank, things of that nature, they're immediately lending it out to the next person because that's how banks make money. So people always had the stigma like, banks don't want to give you a loan. Banks don't want to fund you credit, things of that nature. No, they want to give you the money because that's how they make money off of lending others people money. So prime example, let's say a person puts $10,000 into a checking account. Soon as you do that, that institution is lending it out to a person like me, to a person like you, to a person that's hip to the game, I will say, and they're going to immediately start using that capital to invest into their business. So it's self-explanatory. Others people's money. Believe it. Yes, sir.
Yeah. So it sounds like you could use these different capital streams, which that way you're not out of your own pocket.
Yes, sir.
You're just leveraging someone else's to kind of get you what you need in a way.
Sir. And the dope thing about that is all that, you know, my company, we go for 0% interest funding. So we've seen the highest introductory period go for 21 months. You know, you can go to Mirrors Bank, and Mirrors Bank is out of, I want to say they're based out of Georgia, right? So it's a geo-based bank, and you don't have to necessarily have a relationship with a Mirrors Bank because you can apply from anywhere, but their business credit card, their personal credit card goes up to 21 months, 0% interest, but their business credit card goes, I believe, 12%. 12 months. I'm sorry about that.
12 months, 0% interest.
Yes,
so
sir. You
could almost get 2 years of free money, 0%
Correct.
interest,
Correct.
and transfer it to your checking account, kind of like cash is what I'm assuming.
Well, we're talking about business. Well, that's a business credit card. Now we're talking about business lines of credit. Now business lines of credit, that is a form of cash, right? So you'll have your own account for a line of credit, and all you have to do is just draw from that line of credit and literally transfer that into your business checking account. Now it's cash.
You could either invest, you could open up your store, you could do a lot within 21 months at that peak. I mean, 12 months is still good too. And if you get to 21, even better.
Even if it's 6 months, not to cut you off, Corey, even if it's 6 months, like Bank of America, I believe they have some products that go up to 7 months. American Express, they have the Business Blue Cash and the Business Blue Cash Plus. That's about 6 months, 0% introductory period as well, 0% interest. So it's a lot of things that you can do within a year and a half, a year, or close to 2 years. You just have to have a plan. You don't just get the money and just sit on it, because as soon as you get it, the introductory period is ticking. So, so have a plan before you actually go for for your round of fundings, things of that nature.
Awesome. And I definitely want to ask more about the plan and how you structure a business plan and so on and so forth. But before I get there, what do you think causes a lot of new entrepreneurs to struggle with gaining capital, even if they have great ideas?
Right. You have to really invest into some type of mentorship program. Even if you just start off on YouTube University, you have to go out there and seek the knowledge, right? Because the knowledge is out here. It's 2026. It's knowledge everywhere. So everywhere is not good knowledge, but at the same time, it is knowledge out here, right? You just have to apply yourself. So again, you just have to, whatever industry that you plan on going in, real estate, construction, credit repair, you open the credit repair business, you open the clothing brand, you have to get well knowledge into the industry that you're in. Now, once you do that, go ahead and invest into some mentorship. Go invest into a person that's already done that. I would say that's in the game for about 2, 3, 4, 5 years. They have the proven track record that you're trying to get to. Rather, they charge, $5,000 for the mentorship, $7,000 for the mentorship. You have the funding now, invest into that mentorship. Now you have a easier path for success, instead of going out there doing it blindly by yourself with no accountability, with no community involved. You're not in no Facebook groups. You're not in no group chats. You have no accountability partner. You don't want to do this entrepreneurialism alone. I done did it alone for multiple years, and I always hit my head. You know what I mean? Yeah.
Yeah, I think that's the key takeaway. I mean, the funding is definitely one part, and getting a consultant could be costly. It could be cheap. Just depends on people's willingness to help. But if someone has already walked the path, and you could find that mentor and ask them, like, how did you get there? What stones did you turn over?
Correct.
What did you learn? What would you do differently?
Correct.
That, I think, will help you get there a lot quicker, avoid some mistakes, and then it could end up saving you $50,000 to $70,000
in mistakes,
or several years of you just
bumping your
hustling,
head.
And trying this.
I've been there. It's literally like a GPS. It's a speed. I would say it's like a roadmap to success. You know what I mean?
Mm-hmm.
Yes, sir.
So we were talking about the other people's money. So
Correct.
What options do they have beyond their personal savings account?
Let's say a person doesn't have any personal credit to leverage, right? But they've already been in business, right? You can go ahead and get yourself funded still based off how much revenue that's coming through the business bank account. Now, a lot of these companies want to see at least $10,000 or more in monthly revenue, right? So, but don't just think just because you're at that minimum ballpark number of just 10,000, you're going to come up on $100,000 in funding. No, it don't work like that at all, because they literally have your bank statements. These lenders literally have your bank statements. They're not going to give you $100,000 and you're only generating $10,000 a month. They're going to match you. Now, some lenders, they might give you, I don't know, 15,000 or 17,000, but you're not going to get the maximum funding that you're looking for when you're talking about revenue-based funding. You know what I mean?
That's kind of cool. I mean, even if you're buying a business, they might be able to give you their statements. They might
Correct.
be able to provide some of the deposits or revenues or whatever, and then you could maybe leverage their financials to get that additional loan, and then you could renovate or innovate that business to be something else. But what if you have a low credit score, like a 550, 600? What happens then? Does that cause you to not get funded?
No,
or is there
you still in the game. Like I said, a lot of people think just because you got a 550, you don't qualify for anything. No, it's so many other alternative ways to get funding, right? So now we're talking about CDFIs, right? It stands for Community Development Financial Institutions. Community Development Financial Institutions, they are private investors. They're not your traditional, I will say, institutions. They're not your Wells Fargos, your Amex, your Bank of Americas, your Chase, the Navy Federals of the world. They're not that. They do come in banks. They do come in credit unions. They do come in 501c3s. But I always recommend a person, if you're going to go the CDFI route, work with a 501c3, work with a small company, because they're not going to just look at you as another applicant. They really want to know who you are as the entrepreneur, because a 550 credit score, a FICO score, a 600 FICO score doesn't tell the whole story about yourself. You know what I mean? So long as you have a strong, solidified business plan, and you don't even have to have your business don't even have to be up and thriving, right? It doesn't even have to be up and thriving. As long as you have, again, you have a great idea. You do have a W-2 job. I would say you do have some personal tax returns and some bank stamps that you can show these private investors like, hey, I'm worth investing in too. And I have a great business idea I want to get off the ground. I want to open up an ice cream shop that will help the small kids around the neighborhood, because again, it stands for community development. They want to know, how can you uplift your community by, opening up some business around here. So you're not out the game because you have a 550 credit score.
You have other options. It's not just your credit score.
Correct.
There's ways that you could do it just off the bank statements, the financials.
Correct.
And sure, I'm assuming that the credit score will help if you have a good credit score.
Yes, sir.
But, the community-based ones, you said there's banks, there's lenders, and there's these CDFIs, and some of them are 501Cs, nonprofits, and they're more willing to listen to your story and see how you're going to really help the community.
Yes, sir.
It sounds like it's a little bit better to go through a community rather than a traditional bank for some of this lending.
Now, it all depends on that person's, I would say, position in life, right? So if you're just at a 550 or the 500 FICO score and you're not generating any type of money, that you can't even go to a lender that does, revenue-based financing, and that's your only option, the CDFI, you have to go the CDFI route. Now, it's not going to be as fast as traditional funding, let's say in terms of credit card stacking, business credit card stacking, going to an Amex or a Chase or a Navy Federal. And even revenue-based financing, when you go to revenue-based financing, they'll cut the funds within 72 hours. But when you go the CDFI route, you have to have a business plan, right? And if you don't even have a business plan, these CDFI lenders will definitely help you create your business plan as well, right? So it's all kinds of resources. That's why I say you want to go to a 501c3, a nonprofit company, because they're not going to just look at you as an applicant, just as like if you go to, I believe Bank of America, they do have some CDFIs as well, but they're just gonna look at you, another applicant come through, okay, whatever. But if you go to a nonprofit that's literally based in your city, and they're literally there for you, so they're gonna walk you through the whole process, right? So it might take you 30 to 60 days to get the funds, but you got nothing to lose. You got the 500.
The CDFIs, they sound like a really good avenue for lending, but how do you find them? Can they just reach out to you and you'll help them find the CDFIs?
Most definitely.
Can they just go online and search for them?
Yeah.
Like, what do you do?
For one, you can get on Google, go to CDFIlocator.com, right? And literally with CDFIlocator.com, it's all kinds of companies out there that you can literally work with, right? You can narrow it down to literally the state that you're in. So prime example, if you're in Pennsylvania, you can literally go on that website and type in Pennsylvania, and you'll see all the CDFI lenders, right? From banks, from credit unions to nonprofits. Again, they're all in that state, right? So some CDFI lenders only work with people that's in that state. Some CDFI lenders lend to people nationwide. You just have to do the research, and you can come to me for sure, definitely.
Yeah, because it sounds like you did a lot of the research already, so you could kind of be that consultant and walk them through the process. Because you also said that they're going to need a business plan. So
correct.
If let's say they don't have a business plan, but they want to go maybe a little bit more prepared, they don't want to go to a CDFI without one because they may or may not provide that service to walk them through creating one. Where else can they go to get that business plan? Are there other options or resources?
Great. You can go to Fiverr.com. You can go to Fiverr.com and you can literally pay $150, $200 for a person that can literally help you step by step draw out your business plan with you, right? So if you don't know how to, because I know a lot of people, a business plan is not that easy to just map out, because you have to have marketing, you have to have appendix, you know what I'm saying? You have to have all kinds of things in your business plan, right? And projections and things of that nature. So a lot of people, the average person, that's starting out, that doesn't have any type of entrepreneurialism background, they don't know what none of this stuff is, right? But once you start educating yourself on the process, just reach out and get the knowledge and attain the knowledge and really just put the work in, and you'll be all right.
Yeah, that's a good point. I mean, even if they go to Fiverr or some of the other servers, Fiverr, and they get that work done, that might open up like nuances, like, oh yeah, marketing, that I consider that as starting my business. Or what about the projections you mentioned?
Correct.
What are my projections? So as an entrepreneur, now I'm starting to think like, am I even ready to open up a business?
Correct. Yes, sir.
So as those things kind of get out of the way, lock down the lending. Now we have these business plan strategies. We know who we need to hire, who we need to connect with. So all that legwork can be done up front to kind of get going.
No doubt.
What led you to do money lending. It
Dope,
sounds like
dope,
you're very
dope,
deep into it, and
dope.
you know a lot about this
Yeah,
industry. I can tell
yeah.
just by talking to you that you have deep knowledge in this space.
Yes, sir. Appreciate it.
But from everything that you could have done, why'd you choose to help
Uh,
entrepreneurs get lending?
COVID, man. COVID 2020, we was in the house. We was at home. We couldn't do anything. So I really started deep diving into financial literacy. And I started watching, financial literacy podcasts such as Earn Your Leisure and things of that nature. And, I started really learning about how credit works and stuff like that. So I started literally like deep diving into going in the rabbit hole about financial literacy. And I started pulling up my credit report. And man, I was, whew, golly, I was young. I was probably 2020. I was probably 23 years old, right? And I pulled up my FICO. I pulled up my credit report, and it was all downhill, right? Just opening up accounts, don't know what I'm doing, not paying them on time, didn't know nothing about nothing. So again, we have all this downtime during COVID. So what I'm going to start doing, I'm going to start educating myself, start want to get my life, start getting my livelihood in order, right? And ever since then, I just been on this journey of financial literacy, right? And I fixed my own credit up in 2020. I was fixing up people credit around me as well. I was getting people funded. I didn't even know I was running the funding company, I would say, right? I was getting people funded, getting like high limit personal Amex cards, right? And then I would say 2022, that's when I really started like, okay, I'm on to something.
Nice.
Yes, sir.
Well, I mean, I guess there is the silver lining in COVID. It led you down this path of
Correct.
financial literacy and
Correct.
really becoming an expert in this space. What would you say that credit score or that credit report, is it important to clean that up? And are there strategies
Yes,
or things or people like resources that people can
Yeah.
implement to
Yeah.
clean that up? I mean, how did you do it?
For sure. So back in 2020, it was a whole different. Nowadays, 2026, you have so many. I come from the game where I had to write the credit bureaus myself with my own hand, right? 6 years ago. Now, fast forward to 2026, there's so many softwares out there that you can literally clean your credit report yourself, right? You don't have to pay anybody. You can literally do it yourself. You can use DisputeFox. You can use ChatGPT, things that, so you don't have to pay for a software. You can use ChatGPT. All you got to do is download your credit report. You can get your credit report from My Free Score Now or myannualreport.com, or you can get it from myfico.com as well, and download your credit report, upload that thing into ChatGPT, tell ChatGPT, please act as a credit repair specialist, and generate multiple dispute letters and send them off, right? Literally. And you want to also use in that prompt, please use consumer law mixed in with Metro 2 compliance, things of that nature, right? So you can literally do these things yourself. So, but back forward to 2020, man, I came a long way, man. I came a long way. But I can give you some accounts that if a person is struggling building their credit report, things of that nature, obviously you might be dealing with some late payments, you might be dealing with some collections, you might be dealing with repossessions, whatever you might be dealing with, right? You want to get all that stuff cleaned up using the methods I just named, and also you want to build at the same time. Reason why you just don't want to just repair and not build at the same time, because it's going to take all day. You want to clean and build. So when I say build, is you want to add positive accounts, right? You want to add the credit strongs. Also, you want to start going to these financial institutions and start applying for some secure loans and things of that nature, right? Some secure products to build that internal score with that institution, right? You can do the Tomo boost, things of that nature. All these accounts will start helping you, right? Literally start helping you to build your credit report so you can get where you need to go.
Nice. Yeah. So you don't have to start from scratch. And obviously they can reach out to you for some of those prompts, because you kind of mentioned a few nuggets there where you want to prompt GPT to act with consumer law and some other things.
Correct.
So you also have a webinar, I think you have on
every week.
Where can people find that?
Yeah.
What is that about? What do you go over? Can you
Yes,
just
sir.
plug that real quick?
So every week we do a webinar, right? Every Thursday at 5 p.m. talking about business funding. We're talking about revenue-based funding. We're talking about traditional business funding, credit card stacking, business lines of credit, right? We're talking about CDFIs as well. So I'm just going over the whole business funding aspect, right? It's probably, my webinars don't run for no more than hour and 45 minutes, hour to 35 minutes, something like that. I just help people. I just give out the game. You know what I mean? Talking about how can you really start applying others people's money to get where you need to go and stop using your own damn money, because as long as you keep using your own money, you're going to continue to run out, The bank money is way longer than yours. So you might as well get with the program. You know what I mean? So yeah, every Thursday, 5 p.m.
Why use your personal money when you can use the bank's money? Of
Correct.
course, that's definitely the better route. You mentioned credit card stacking.
Correct.
That's one thing. So what is credit card stacking?
Credit card stacking is where we go to different institutions, right, and go apply for back-to-back, literally back-to-back for different products they have, credit card products they have, right? Whether you can do personal funding, doing personal credit cards, or you're doing business credit cards, right? So let's say we go to we start off with some credit unions. First Tech, they only do personal. We go to Dover. Dover Credit Union, they only do personal as well. But we literally credit card stack, right? And when I say credit card stack, it's a real strategic thing. We don't just apply. No, we're doing this strategic format. So we go to banks that pull from certain credit bureaus, right? So let's say we go to banks that go pull from Experian. Bank of America pulls from Experian. Amex, they pull from Experian, and Chase, they pull from Experian as well. So just on that bureau alone, we will go to those three institutions and go apply for business credit cards. Not only just apply for business credit cards, we want to go to institutions that lets you apply for multiple business credit cards on one credit pool. We never want to go to an institution that will only let us apply for one credit card on one credit pool. No, we want to go for multiple products on one pool. So prime example, like Amex, they let you apply for like 5 of them on one credit pool. Especially if you already have a relationship with Amex as well, they will never even pull your credit report again. So if you already have a relationship, rather on the personal side, now you're going for business funding, they're not going to credit pull you. They're going to soft pull you. You're going to soft pull your Experian and give you about 4 or 5 cards on one pool.
Nice. Well, what's the difference from a hard pull and a soft pull? Does that impact your credit score overall?
Correct. When the institution hard pulls you might lose by like 2-3 points, right? But a soft pull, and it's going to show up on your credit profile as well on that hard pull. But a soft pull, you're not going to lose any points. They're just going to soft pull you. Any lenders that you go for, they won't see the funding that you just got from them on that credit pool. So it's
Nice.
a soft pull. Mm-hmm.
Is there any way to get the credit card without them doing an inquiry at all?
Yeah, for sure. It's definitely methods. Like I'm gonna give you 3 of them. Boy, I love that. Oh, I love that. So Apple Wallet, Apple Card, right? So what you want to do is Apple Card, Westgate Resort, and also upgrade.com. They definitely have credit cards, right? So, and they all pull from TransUnion. These are all personal cards, no business. These are all personal, right? So what you want to do is once you go to these companies, when you go to your Apple Wallet, right? iPhone users only, no Samsung. When you go to the Apple Card, right? You're going to get pre-approved, right? They're going to actually show you the limit. Rather you get 7,500, 8,000, 10,000, wherever you get. Before you hit accept, you want to go to your TransUnion account, right? Your TransUnion account, go to your TransUnion account and freeze your credit profile and freeze it. Now you can wait about like 2 minutes, then go back to the application, hit accept. You're going to do the same thing for Westgate Resort and Upgrade. But before you do those things, I would say you don't want to apply back to back. You want to give like a day, right? So example, Apple Card on Monday, Westgate on Tuesday, Upgrade on Wednesday.
Nice. So It sounds like you get pre-approved.
Yes, sir.
You go freeze your report.
Yes,
and
sir.
then you go accept the pre-approval.
No inquiry.
Let it go through because then it's going to block it when it goes to the credit union.
Correct.
But you're still going to get the card.
You're still gonna get the
and then
card.
you're going to go unfreeze your account afterwards if you're going to do other stuff. Or
Yes,
just leave
sir.
it frozen at that point. I mean, you
Yes,
got
sir.
your card.
Yes, sir. So you just got 3 cards, no pool, right? So let's say you average about 10 a piece. That's just $30,000 that you ran up in 3 days. No hard pull. So now, and that's all personal. So they're going to reflect to your credit bureau, right? So now you're going to be in position for business funding as well.
Yeah, because typically whenever I get a credit card, as soon as it hits my account, the other bureaus find out. And then that limits my ability to get more credit. Even though like I want to raise it to like 40 or 50 or 60,000, I'm kind of capped because that first one came in and then I'm like, dang, I wish I had a little bit more money.
Yeah.
But now this way I can get that larger sum because one's not blocking me from getting the next one,
Yeah.
the next one.
Yeah.
And then once I have them anyways, they're going to see it that, okay, I have it as long as I'm fiscally responsible.
Correct.
They're going to usually give me that same amount next time, if not more.
Correct.
So
Yes,
we'll
sir.
kind of build on it.
Yeah, you want to apply strategically. You never want to just apply for cards, with just firing off applications, don't know where lenders are pulling from, which credit bureau they're pulling from, things. And like I said, I just gave you 3, they all pull from TransUnion. You have to know these things. And if you don't know these things, you can literally go to helpmebuildcredit.com. Helpmebuildcredit.com is going to tell you which all Amex, Chase, all the major big banks, they're going to tell you exactly where they're pulled from which state, which city, etc. So helpmebuildcredit.com. Go ahead.
Yeah, I think these are like really great tips and tricks, especially for new entrepreneurs, 100%.
Correct.
When entrepreneurs first start out, what are some of the biggest mistakes that they end up making when it comes to lending?
When they actually get the bag, they blow it. They don't invest it into mentorship and they don't invest it into the business, right? They do crazy things with the bag, right? You just got $40,000, $70,000 in funding. Now you talking about taking the trip. What are you taking the trip for? This is business. You don't just go blow you got that 0% interest. You think like, oh, I can pay whenever. That, depending on how many months you got it for, is going to blink of an eye. It's going, now that interest starts to kick in. Now, depending on your credit profile, you're going to see the interest rate go anywhere up to the highest I've seen the interest rate, maybe about 26%, right? But industry standards anywhere between 18 to like 24, right? But again, it also depends on that person's credit profile as well.
Yeah, definitely don't blow it. I mean, you're starting a business. Do it for the right reason. Try to make that money make you money.
You don't go on the trip and blow the bag.
Mm-hmm. Yeah, that's good.
You don't go shopping with it.
That's a good tip. What are your thoughts about like buying a business versus starting a business from scratch? And are there ways to find businesses for sale?
Yeah. Business acquisition, right? So I don't know too much about business acquisition because every business I had, I always started from scratch. But I do know once you do acquire, you want to acquire a business that you plan on purchasing, you want to make sure it's cash flowing. You want to come in the game with some equity. You want to come in the game with some cash flow if you're going to buy a business, right? And just from the outside looking in, again, I never bought a business, but just from the outside looking in, it looks like, man, it just look like a less of a headache, you know what I mean? Just a purchasing, acquiring a business that's already up and going, up and running, things of that nature versus starting it from the ground up, starting from scratch, getting your LLC or your S Corp, C Corp, just going through the trenches, going through the mud and things of that nature, and really just in the trenches with it, starting it from ground zero. But that can be a beautiful journey as well. I don't want to defer anybody or scare anybody from starting a business from scratch because it's a journey. Whatever you do, right? Business acquisition or starting from scratch is going to be a journey.
Yeah, 100%. And for the new business owner or the entrepreneur that's just thinking about, now we're thinking about funding and the business plans and all this stuff. Mm-hmm. What about how you structure your business? Does that matter?
I love that. Yes. So for protection or for funding, which one?
Well, for either. I mean, let's start with protection first. And then for funding.
I love that. So for protection, yes, you do want to structure your business for protection the correct way. Rather you go into an LLC, you go into S Corp, rather you go into C Corp, whatever. So I'm gonna break it all the way down from A to Z from protection side, right? So a lot of people think you just get your entity first. No, you don't. You don't give the IRS and the Secretary of State your personal information. You're all the way backwards, right? Now, if you have done that, is you still in the game. You still can go ahead and fix those problems. But if you're not there and you're starting from scratch, you do not create your entity first at all because you're going to give the Secretary of State and the IRS all your personal email, your personal address, your personal email address, your personal phone number, etc. Right? So we do that last. So these are the steps that you want to structure your entity first before you go and buy your entity, right? You want to go to Regis.com or Opus.com. What is Regis and what is Opus? Regis and Opus are virtual brick and mortar addresses, right? These are real brick and mortar buildings that you can literally walk into and pick up your mail, right? It comes with a real address and the whole nine, right? So you want to get your virtual address. You want to get an email address as well from GoDaddy.com, or you can go ahead and go to Google.com and pay like $6 a month from Google, I believe. And you don't want a Gmail, you don't want a Yahoo. You literally want info@businessname.com or customer service at businessname.com, things of that nature, right? So you can go to GoDaddy or Google. You can go ahead and get your website from GoDaddy as well. You can get that anytime. It really doesn't matter. But also your business phone number, right? You want to go to Ring Central, or you can go to Grasshopper. You pay about $20 to $35 a month. You want an 800 number or 855 number or 877 number. You don't want to give out your personal information when you're doing business because your clients, your customers can literally look you up on Google or the Secretary of State. All your personal information is right there on the Secretary of State. What if you have a crazy customer? What if you have a crazy client? Now they know where your physical address is. So that's the protection side, right? Now, since you have those documents, now you go to like LegalZoom.com or you go to, I would say, busy.com. Now you go buy your entity and you hand over those business documents, right, to that company so they can form it for you. Now, if you don't know how to do it yourself, that's they're in place for that. Now you can do these things on your own and pay nobody, such as like getting your LLC or your S Corp, right? You go to the Secretary of State, go to IRS, get your free EIN number. But if you don't know how to do that, I always recommend people let the professionals handle it.
Yeah, that's for protection. And we'll get to the lending in just a second. But there's also, like, most people are familiar with the sole proprietorship. Usually people that are starting businesses are one-man shops.
Yeah.
Maybe they have a business partner, maybe they don't, but oftentimes they have an idea and they're trying to formulate it, get it off the ground. So is there challenges being a sole proprietorship, or is that okay when you're setting it up?
You can be a sole prop in terms of getting some funding. Yeah, you can, but you're not going to really get the max. You're not really going to get the high limits that you're looking for, because these institutions, these lending institutions, are not going to look at you as, a business. They're just looking directly as you as the consumer, right? So you want to separate yourself from doing business, right? So if you're going to be in business, don't even just waste your time being a sole proprietor. Just separate yourself immediately. So that's why the LLC is here, the S Corp is here, the C Corp is here. Just talk to your advisor, your attorney, your CPA, whoever you do business with, get legal advice.
Yeah, now that actually leads me into then the business lending. So
Correct.
Like, it does matter from the money side. So how do you structure it to get the most lending?
Well, see, on the internet, the gurus will tell you, you want to structure your business for high limits. I quite disagree with that, because I have clients that doesn't have a Regis, that doesn't have an Opus, that doesn't have no virtual brick and mortar address, that doesn't have a 800 number from Ring Central or Grasshopper, that doesn't have a professional email address, things of that nature. They just have a Gmail, right? And we still get them high limits of funding. So the banks really don't too much care about if you have a suite number on your address or things of that nature. It's going off of your personal credit profile when you're talking about personal guaranteeing. They want to know if your personal credit profile is structured the correct way. Now, when we're talking about personal credit profile structured, yes, but business structure for funding, I can't really agree with that, because I had too many clients get approved with none of that stuff. So,
What about like the naming of their business or naming of their email addresses? Does that matter, the way that they're perceived online?
Yeah, you definitely
people treat them when it comes to funding.
Yeah, you definitely don't want any high risk, industries in your business name. You don't want trucking, transportation, cannabis. You don't want nothing that's high risk that a lender does not want to do business with, right? And those names I just said are super high risk, right? Adult entertainment stuff. You don't want to have that in your business name. So keep your business name very general, right? Something like, I will say ABC Worldwide, just for example, right? ABC Enterprises, ABC Solutions, stuff like that, right? Real global, real general, where you can't really tell what you do. So I'm not saying you can't be in the trucking industry. I'm not saying you can't be in real estate. Just don't have it in your name.
Yeah, it sounds like there's a lot of bias that might come at play, and that might actually hurt you from a lending perspective.
Yeah.
From
I've seen it.
Other perspective, or
yes, sir.
So if they know that you're high risk and you resemble a high risk industry,
yes, sir.
They're like, oh, this is just another, whatever. They're gonna label you right away.
Yes, sir.
What about trademark and copyright? Is that important as part of a business, and when should they be considering that?
It depends on how far you want to take it. How far you're going, and how much really sweat equity that you really put in. And if you've been in the trenches with it, things of that nature, I can say you can get a trademark and things of that nature for sure. Why not? But if you plan on, you're not really building it, you're not really building it day by day, brick by brick, you don't have to go waste your money to go get a trademark. But again, if you're in the trenches and you building it brick by brick, go and get a trademark, especially if you got your heart into it. Something like if you got a clothing company, something like that, you can go get your trademark.
Yeah, it sounds like there's like so many avenues that people have to think about being an entrepreneur. So what kind of mindset does an entrepreneur need to have to be successful?
When people talk about the mindset, people really I feel like they take it as cliche because they hear so much on the internet. It really starts there. Like, before you want to jump into anything, your brain, literally your mental, has to be on point, because if it's not, it's going to be some trials and tribulations. You're going to have trials and tribulations in anything, right? But it literally does start with the brain, what you're watching, what you're entertaining, how much time what kind of stuff you're consuming on your phone, what you're looking at, what you're going to sleep to, things of that nature, right? So you have to really train your brain to really block out the nonsense to have that real extreme focus. Entrepreneurs win with extreme focus. And I don't want to be on this podcast like I just have the best extreme focus, because I still deal with it to this day as well, right? But I'm just giving you, my true self. So it's always things that we can be better and work on day by day.
Yeah. Is there any tips or tricks to kind of stay in the zone and
Yeah.
stay focused?
Yeah.
So that you stay motivated
Yeah.
and reach your goals?
The gym is one, right? The gym is definitely one that, and we're not, when I say the gym, it's not about, literally trying to get in shape, things of that nature. It's about really turning into a different person, right? It's about becoming a different person. It's literally about that consistency, that discipline that you're training your brain, right? Yeah, the body is good as well. Of course, you want to go in there and do your thing, but at the same time, you're really going in there to become a different person, right? So the gym is number one. What you eat, that's number two as well. And again, what you watch, it really depends on, it always depends on, man, what you're training your brain, man. So if you just watching bullshit on YouTube all day, that's what you're going to get, right? You really had to watch what you consume, man. You had to watch, I would say positive things, man, and train your brain. It's not an easy thing because we're so surrounded by social media all day, right? It's all kinds of stuff on social media. So we be entertained, we be watching it, we be, oh, he just jumped off a bridge, oh, he just got ate by a shark or some shit. So, but you have to watch it though. You know what I mean? Not watch that, but you have to watch what you watch.
Yeah, absolutely. So it sounds like the mindset that an entrepreneur needs to have is focus on the body as well as the mind. The mind really matters when it comes to what you're consuming. So change your social media. It's okay to watch that stuff, but watch the motivational speech and get some good concepts from there.
Yes, sir.
And it's not to say that you're cutting it out, but you're just replacing it with more knowledge.
Yes.
And then the body side of it is like stay active. That's
stay
good
active.
for your mental
Fitness.
health. It's good for your stress.
Yes, sir.
It's good for
yes, sir.
Good for sleep and everything else.
Yes,
so
sir.
You're really focusing on your body and mind. So the business, it sounds like it's going to take a lot out of you. So you got to stay focused.
You guys, man, the number one game I can give, man, in entrepreneurship, you have to become a whole different person. You can't be the same person. If you're starting from scratch and you're tired of being sick and tired and you want to go after this thing and you at your job and it's more than life and things of that nature. You hate being at work and the position that you're in right now is not cutting it, things of that nature. And you've been looking at entrepreneurialism, you've been looking at business, you've been seeing some cool things. I say this, man, before you even think about just jumping it all the way into that lane, you have to become another person. You have to become a whole different individual. You can't be the same person thinking you're going to get X, Y, and Z results because you see people on social media making $1 trillion a year. No, they made that $1 trillion in a year because they became a different person throughout the process, throughout the journey. So you had to become a different person first, man. That's a fact.
Yeah. Sounds like there's some identity building that has to occur.
Man, big identity. Yes, sir.
Let's say someone kind of gets there, goes through the lending, goes through the funding, works with you, gets some advice, does all this, gets their email, address, phone number, these things set up. How do they market themselves? How do they get their name out there? Is there like registries, directories that people can sign up for? And what do they do? Because you can have the best idea, but if you can't, no one can find you.
You can be the best kept secret.
Yeah.
In the words of my mentor, you can be the best kept secret. You can do everything. You literally can be the best baker. That you can have the best. You can bake the best pies, the best cakes, and things of that nature. But if nobody knows you, nobody's going to know you bake the best pies because you're not marketing the correct way. You're not on social media, right? You're doing this still out your house. Nothing wrong with doing outside your house though, but you're not promoting the correct way. You're not marketing the correct way. You're not running no Facebook ads and things of that nature, right? You're not running no Meta ads, no YouTube ads, no Google ads and stuff like that, right? So you have to, it's a real saying, man, to make money, you do have to spend money, but that's where the OPM comes into place. You want to use others people's money to leverage that audience. Or even if you don't have, OPM and you're in a credit repair process, things of that nature, you still can leverage others people's audience, right? You can get on podcasts, right? You can get on shout out pages that maybe charge you $100 for a post and they have 70,000 followers on their Instagram. So it's other ways that you can get yourself out there besides just, word of mouth. You know what I mean?
Yeah, no, absolutely. I think that's good. If you could be the best kept secret, like you said.
Yes, sir.
But you got to get in front of that audience.
You have to
market. So
you have to.
Yeah, do some of the social media. Think about it.
Please
join some directories, network groups, join some podcasts. Hey, join.
How do we meet? Remember that? Yeah.
Right.
We literally met at a networking group. So if you have, there's no excuse just because, yes, I just said it takes money to make money. I understand that, but you still can get out there and get started, right? It's never going to be the perfect time to start. Oh, I don't have 100,000. Oh, I don't have 50,000. Oh, I don't have 100 million. I can't start. No, it's never going to be the right time to start. You just have to start. It's a lot of free networking groups that I still go to this day. I literally met one of my clients in December, literally 2 months ago, two months ago, right? 2025. I met him at a networking group at the Black Chamber of Commerce out here in Sacramento. I spoke at the Black Chamber of Commerce. 11 days later, we got him $85,000.
Wow, $85,000.
$85,000. And it's on my Instagram. If you think I'm lying, I got receipts.
What other lending tips, business tips do you have?
Business lines of credit, right? They're never going to come at 0% interest. You only pay interest on the money that you draw from, right? So again, and when you go for business lines of credit, most banks, you can't get a business lines of credit if you're not in business for 2 years or more, right? So now, but Wells Fargo, they'll let you be in business for 6 months and get the business lines of credit from Wells Fargo. But to I would say get approved for that business lines of credit from Wells Fargo, you want to have a relationship with them first, right? Don't just go to these institutions out here and think you just can apply with no type of, I would say, relationship, right? Now, some institutions, yes, but and again, your credit profile has to be, a lot of people think it's about the credit score. It's not about the credit score. It's about the credit profile, what's reflecting on that profile. So when I say credit profile, you can look at it as like a person's school report, right? Your grades and things of that nature. These institutions love relationships. They're not just a transaction. You know what I mean?
Yeah, no, that's good. There's these business lines of credit, and it's that report more or less.
Yes, sir.
More than the credit score. It's kind of like your resume or your grade sheet.
Your internal score as well with that institution. How many deposits are you putting in? Do you have any overdraft fees, right? How long have you been a client with them? Things of that nature, right? How much money do you have in your checking account and your savings account? How many products do you have with them? Do you have a direct deposit with them from your W-2 job or something like that? Do you have any personal credit cards with this institution? So institutions are really relationship based, man.
Yeah, so it sounds like they're doing their own credit score on you outside of the big bureaus. They're creating a risk profile. So if you have a good relationship with them, that'll lower your risk profile. So when you apply for something, they're going to be more likely to give it to you regardless of your credit score.
Yes, sir. And credit unions are known for that. Credit unions are known for that. Credit unions are really relationship. But think about it. Credit unions are everywhere, on every corner in these cities. You got just literally a credit union around the corner from here, Sacramento Credit Union, literally 2 minutes away, right? So if you're in Sacramento and you're looking for a credit union, you got Traverse Credit Union. You have, I think it's called Community Credit Union out here as well. But I know about Travis, and I also know about the Sacramento Credit Union as well, right? So if you have relationships with these institutions, you can go get some funding,
Yeah, absolutely. Now, let's say the funding kind of rolls over. You get that 0% introductory period, you get the 12 months, 21 months.
Correct.
Are there strategies to kind of roll that to more 0% interest rate credit cards?
Yeah, so it's two options that you can do, right? One, if you have a zero balance, you can cancel that card, right, and reapply for another 0% interest business product, right? But if you don't want to do that, you want to keep it open. I tell my clients this as well. Once that 0% interest introductory period is over, you can literally call that only if you've been making your payments on time. Don't try to do this if you ain't been making your payments on time. If you've been making your payments on time and your introductory period is almost up, you can literally call that institution back. Hey, how you doing? I noticed my 0% interest introductory period is almost up. I've been making all my on-time payments, things of that nature. I was wondering if we can extend that introductory period for another 6 to 7 months. They can rather say yes, or they rather can say no. Some say yes, some say no. So it's literally about shooting your shot. Steph Curry missed 1 million shots in the dark, but we only know about the ones that he made when the lights is on. You know what I mean? So shoot your shot.
Yeah, I mean, if anything, maybe they're not going to give you that higher interest rate. Maybe they have another promotional period they could tack on, or maybe it's not going to be 0. Maybe it's 1%. That's still better than nothing, or 27%.
27. Yeah, for sure.
What about like debt collectors then? If a debt collector is calling someone and they're trying to build their credit and stuff like that, should they ever kind of respond to that debt collector, or how should they go about getting rid of some of that debt that's in collections?
For sure. If you have a debt collector, if you have any collections on your credit profile, you can literally, that's what I say about collections, right? You don't want to pay your collection. Now, you still technically owe the debt. So let me just say that, right? You still technically owe the debt. But if you pay that collection off, right, and all it is going to do is update on your credit report saying paid, it's not going to fall off, because that's a derogatory remark that you don't want on your credit profile whatsoever. So I say you don't want to pay your collections. You want to get it removed. Now, technically, yes, you still owe the debt. Yes, you still owe it, but you can get that collection removed, right, by using Metro 2 compliance, CFPB, that's Consumer Financial Protection Bureau. You can use consumer laws, things of that nature, right? And again, you can use Dispute Fox to get these collections off, things of that nature. But if you do decide to pay, you can ask for a pay to delete. Right? What a pay to delete is, you want to get that in writing and you want to get that in email as well. You want to say, hey, I know I allegedly owe this debt. And let's say the debt is worth for $1,000, right? And these collection agencies, man, they'll take anything. Literally, they'll take anything. They'll drop the balance down all the way from $1,000 to $200 just to get something from you, right? So you can literally negotiate that balance to wherever you feel like you can negotiate it to, and ask for a pay to delete, right? If they agree to the pay to delete, get it in writing, right, to your address, and you get it in email. So you don't pay that collection until you receive that notice from that collection agency, because if you do that and you pay it and you don't get that in writing, they're gonna be like, well, I didn't agree to that. You know what I mean? Yeah.
Yeah. So basically, don't pay the debt collector. Answer the phone. Tell them you want it in writing, in email. Yeah. And then negotiate that down, and then you can pay it. Pay to delete. Also, it will delete the actual derogatory remarks. Your credit score is going to go up. That's not going to be there no more. And if you get it brought down, you're going to pay a fraction of what they're asking for in the first place. So
correct.
That's a good way to then clean up some of that credit report and then come to you for some lending. So what is your typical customer? What is like that person that would be a good referral?
Yes, sir. So I have two ideal clients. One is a person, their credit profile is already built out. They have about a couple credit cards that's over $10,000 a piece, right? Their utilization is under 10%. I'll say under 20%, because I know a lot of 10% is really like ideal utilization, but a lot of people it's not there. So I'll say under 20%, right? Their credit score is over 700 for sure. And that's my ideal client, right? They have their articles organization, they have the EIN number, things of that nature, right? They've been in business for 30 days or they've been in business for over 2 years. It really doesn't matter, right? So now we're talking about going for funding, showing no type of financial documentation. Again, no bank statements, no payroll, no tax returns, none of that kinds of stuff. It's all about leveraging your personal credit. But if a person is not in that, I would say that in that space, in that criteria, where they can't leverage their personal credit, but they have bank statements that they can show, now we can go ahead and go get some revenue-based funding.
So let's say they come to you and they want to work with you for revenue-based funding, some lending, whatever that may look like. What do you charge, or how do you get paid in this whole process?
We do everything up front for free. Everything. Literally, we do all the applications. We talk to all our lenders. We do all the heavy lifting up for free. We just charge a 10% success fee on the back end. So prime example, to go back to my client that I spoke about, when we got him the $85,000, 10% of 85,000, that's 8,500. So he literally received the funds in his account, and all he did was pay the 10% success fee of 10%.
Nice. So you do all the legwork. You help with all the debt cleanup, the finding the right lenders, getting the right things in place, the structures. You're basically the consulting all along the way, kind of like a realtor, like navigating that compass and all that stuff.
Yes, sir.
And once they get funding, then you'll get your cut at the very end. So
yes, sir.
If they don't get, that's even more pressure on you to make sure that they're successful.
Yeah. And my company is always trying to get them, the max, right? We're always trying to get them, as long as that person is in position, we're always trying to get them the max, man.
Is there anything about lending that we haven't talked about that you want to bring up?
Lending, business funding, the finance space is always changing. Every day is changing. These banks and these institutions, they always have updates. Now they have a lot of AI, things of that nature, right? So a lot of stuff is always updating, right? The stuff that was working from 2 years ago is not working today. So you just have to, again, just educate yourself on the process, right? This is not a get rich type of real fast, real quick scheme. No, this is not it. This is really talking about really building the business, really building relationships, really building wealth. And that takes time. A lot of people, especially in this generation, we want stuff from, microwavable right then and there. And, I understand it. I get it, but that's just not what it is. You know what I mean? So when you're actually building a long-term business and a solid foundation, just your real empire, I heard Rick Ross say, man, you got to put 10 years on that shit, man. You got to put 10 years on it, man. If you're not in it for a minimum of 10 years, don't start.
Yeah, that's commitment. That's commitment.
If you're not in it for 10 years, man, don't start it, man. If your heart not in it, don't start it, man.
Yeah, that's good. For people that are committed and are ready to start it, where can people reach out to you to find out more? How can they connect?
Yes,
follow
sir.
you on your socials
Yes, sir.
and get in touch?
Yeah. So my Instagram, all my socials, right? YouTube, TikTok, Instagram, Facebook as well is ShareTheGame_E. You guys can come to my webinar. I have free webinars as well every Thursday, right? 5 p.m. Pacific Standard Time, right? You can go to my website, businessfundingmastery.net, and you guys can go ahead and get your ticket there, and I'll see you in class.
Well, we'll get it on the screen for the video viewers. We'll get it in the description below. And people that are listening on the audio version, just click into the description to find those links to get back to J&M Enterprises. That'll get you right there.
Yes, sir. Quickly. Most definitely.
Well, Erron, we have a section where the last guest leaves a question for the next guest. And the question that I have for you is, what is the best advice you would give someone else in business?
Wherever you was at, yesterday or a week ago or a month ago or even a year ago, don't turn around. Because where you going to go back to? Where you going to go back to? You didn't come this far just to come this far. So why not just keep on striving, keep on pushing, man? Like, you got to keep on swinging the bat. You literally have to be Barry Bonds, Babe Ruth out here. You got to, rather you striking out 1,000,000 times, that one hit can change everything. That one home run, that one grand slam can put you in the game for a lifetime. So don't turn around. Just keep going, just keep forward. And because again, man, this road can be lonely. Entrepreneurialism can be lonely. It can be, it's going to take a lot of sacrifice. A lot of people going to look at you weird. A lot of people going to, say that you're acting funny or you don't come around no more, things of that nature. But you just have to know that you're in the building stage. And also, my number one thing as well, the reason why I'm here on this podcast is because of God. Period, point blank. I know I'm kind of getting winded, but the number one reason why I'm here on this podcast is because I have extreme faith in the man up above. So that's the only reason why I'm here is God. So I just want to get that out, nip that in the bud completely, is because of God.
What's the story behind it? Is there a short version about your testimony?
When you have been through trials and tribulations, ups and downs, life and death situations, things of that nature, and you have made it out all those hula hoops, made it out, all those trials and tribulations, it can only be a higher source doing that. Like, I can't be crazy. And I'm not too much of a religious person. I'm more spiritual, right? And whatever you believe is what you believe in. And whatever religion is, wherever your religion is. But that higher power is definitely working at all times. Rather, you might not see it, but it's happening, right? It's literally happening day by day. And when you're on your entrepreneurialism journey as well, you might be thinking to yourself, it's not working. Nobody's answering the phone. Nobody's calling me back. Nobody's liking my post. Nobody's reaching back out to me. Nobody's want to get on my podcast, whatever the case may be. But if you continue just to keep faith into the man up above, into the higher source, and don't turn around, you're going to get to where you're going to get to. That is guaranteed. It's guaranteed. It's guaranteed. Because the only thing, if you stop and if you quit and you turn around, the thing that is guaranteed, you won't make it.
I guess there's no better business partner than the higher power himself.
Man. Man, so, and you sometimes you might be mad at him. Sometimes like, why he ain't talking back, but he working.
Nice.
You got to trust and believe the faith. You have to have so much faith into the higher power, man. It's like you got to be delusional, especially about this entrepreneurialism, this journey. You have to believe the delusion. I heard Busta Rhymes say it's only delusional when it's not working, but when it start working, was it really delusional? Was it really delusional when it actually start working? When you actually start, obtaining all the goals and making all the connections and the relationship things in the nature, and your business is going where it needs to go. And now, was it really delusional the whole time? So through the process, when your phone is not ringing, when you're not getting likes, when nobody's reaching out, you have to be completely delusional. You have to. You have to. You got to be crazy.
Yeah, you gotta definitely go all in on your strengths and just keep it pushing at the end of the day. Erron, thank you so much for joining us today. It's been a pleasure.
Love, Corey.
To the viewers, funding isn't random, it's strategic. And it's available if you understand how the game works.
Yes, sir.
So whether you're just starting out, rebuilding your credit, or looking to scale other people's money, Erron's here to help you out.
I'm your guy.
Thank you for watching this episode of the Key Concepts Podcast. Catch you on next
time. Love.